Hello and welcome to the 4-Minute Morning for today, which is Monday, 19th day of March 2018. My name is Derek. Today is also Crypto Day. Every day is such. Let's go back to the very beginnings and let's talk about good corrections or how large some of these were. Starting with the infancy, Bitcoin back in 2010, about 5 cents at this support level. It never really had a decent correction on this weekly term time frame until it went down below this 18 average of lows, bottoming at $2.15. So with a 5 cent low and a $31.91 high, a good correction would have been $2.71. And that worked out to be, well, where it bottomed at. And it did so on 2 different occasions, as it obviously came down here, stayed there for a few weeks, bottoming again, and it has never been in that area since. The next correction would have been the Mt. Gox incident. So they only had 2 from the time it started to the end of the Mt. Gox, with the second one being, of course, the end of that exchange. The market had some sideways corrections along the way, like in here from March of 2013 through October of such. And that's a good correction, but by no means is that one of a price. So when calculating the low for the next correction, I realized by taking 5 cents, it's hardly correcting at all if it's only going down to 135. I'll take a look just to see on this low using the next exchange. I have a low here at 204 and 199. I'll use $2 as the next low. But as I view it via Bitstamp, it has a different low, about 2.25. So I'll use that instead, but I can tell this is already not much of a correction, with price action coming up to about 11.50. So therefore 109 would have worked out to a good correction. 269 is a half-assed one. And it managed to come down to that point, but it did go sideways for quite some time in here. So in the early stages, you could say, you know what, that's not that great of a correction, but it's good. I'm looking for 38.2% to be a normal solid one. But if you look at this a little more advanced, if you can come down to a 23.6% and then go sideways like this for a significant period of time via correcting through such, then that makes it a better correction after that stage. Because there's a lot of candles, I'm going to switch this from a weekly chart to about a 20-day chart. And we're looking at from now these lows, because these are a long time ago and it's got a long way to correct from there. 23.6 down at 62. It's already been there once. 38.2% down at 3,000. That would be a good correction. And then it's never had that since the beginning, a 61.8% down correction on a long-term level. That would come in at a $1,000 point. There's nothing wrong with only correcting 23.6% and having the move. In fact, if that happens, if it does bottom within this area and doesn't stay here for that long, maybe for a few months, and in a 20-day time frame, that isn't long, and then breaks out above this, then you have again a half-assed correction, and you're probably going to have a monstrous rally moving forward. And as we can see, to finish this off on the weekly chart, sideways action would be somewhere around 6,000. It could easily pierce below it, nothing wrong with that, up to around the 18 average of highs, and it can pierce above that as well, so maybe about 15,000. So 15,000 to about 55,000. I would consider, if it's going to go neutral, that would be the range it would go in towards. And of course, if it's going to have a good correction down, again, 3,000 area. And having a situation where it can hold, stay above, and break the 18 average of highs, then the half-assed correction will be all it needs, and you can expect a large breaking above key resistance, because if that's all it needed, then that's very strong. Thank you for watching. Bye-bye.